quick overview of what I'm going to be talking about here today. We're going to look at the economic and insured losses, both here in Canada and globally, and we're going to touch on insurance protection gaps. And then we're going to do a bit of a deeper dive into flood risk. Yep, going the wrong way. IBC is the National Trade Association for Canada's property insurers, those companies that provide home, auto, and business insurance. As part of the financial services sector, our industry plays a significant role in the Canadian economy. There are more than 192 private companies competing across the country, employing roughly 130,000 people. Both here in Canada and globally, natural catastrophes have been taking an increasing economic toll. This is partly due to the increasing frequency of climate-related losses and partly due to the fact that there are just more properties in harm's way. IBC has good information available on insured losses in Canada, but I had to look a little further afield to get some of the other figures that I'm going to be using. Canada is not unique in seeing the costs of natural disasters increasing over time. It's a global phenomenon. Economic losses due to extreme weather increased 170% between 1983 and 2022, and flood damages increased by 157%. The last decade was the costliest in modern history for global natural catastrophes on both a nominal and inflation-adjusted basis, as climate change continues to raise the threats from NatCat events. Last year, there were 421 notable disaster events, causing $313 billion US in economic losses. Of this, $132 billion, or 42%, was insured. That translates into about 58% of worldwide losses not being insured. Not all economic losses are insured, and what we're seeing is a discrepancy between the total economic losses and insured losses. That amount is what we call the protection gap. You can see that in some parts of the world, the protection gap is quite large. Globally, we have seen NatCat losses increase at 5% annually from 1970 to 2021. The last decade, 2011 to 2020, was the costliest, even after adjusting for inflation, with approximately $210 billion US in losses per year on average. Overall, though, the share of insured losses has increased in the past few decades, so that's a bit of good news. There are a lot of reasons for these gaps, and both insurers and governments have a role in addressing them. But the first and the last reasons on this list are key, and both insurers and governments have a role to play in increasing risk awareness and explaining what insurance coverage is available. Turning to Canada. The costs here in Canada have been increasing at a staggering rate. The average cost of disasters has jumped over 1,200% since the 70s. Over the last decade, the average cost of weather-related disasters and catastrophic losses has risen the equivalent of 5.6% of annual GDP. 10 years ago, this June, flooding in southern Alberta caused $6 billion in economic damage, including $1.8 billion in insured losses and $600 million lost due to employment disruptions. Manitoba and flooding seem to be almost synonymous, with regular flooding taking place here in the province. The biggest flooding events took place in 1826, 1950, 1997, 2009, and 2011. But make no mistake, these were not the only years flooding happened. The 2011 floods particularly remind us that indirect costs are costs as well. And even if they don't always get counted as part of an economic cost tally, they are very real and we need to keep them in mind. 7 years ago today, 88,000 residents of Fort McMurray and the neighboring communities were evacuated as the wildfire approached. Many had the harrowing experience getting themselves to safety, and sadly, 2 people died that day. The wildfire destroyed around 2,500 homes and buildings and burned 1.5 million acres before it was finally extinguished 2 years later. It remains the largest single weather-related insurance loss event in Canadian history, resulting in nearly $4 billion in insured losses. The combined property, infrastructure, business interruption, and other indirect economic losses of the Fort McMurray wildfire have been estimated at $11 billion. That is equivalent to 3.5% of Alberta's GDP. Increasing severe weather costs can be indicators of the financial costs of our changing climate. In January, IBC reported that the insured damage for severe weather events reached $3.1 billion last year. These preliminary totals have already changed, and the amount now stands at $3.2 billion and could change again because it can take up to a year to finalize those loss estimates. Noteworthy severe weather events last year included Hurricane Fiona, the Ontario and Quebec derecho, the Eastern Canada late winter storm, and in the prairies, spring and summer storms and hail were the major loss drivers. Just a word as I move through these insured loss figures in the next few slides. These are for what is considered catastrophic events. Historically, that has meant events of $25 million or larger. But in March 2022, CatIQ, the group that collects a lot of this data, they updated their minimum loss figures to 30 million. So what we're seeing is that this is in no way a complete tally of even insured losses, because there are always events that don't hit that bar. 2022 now ranks as the 3rd worst year for insured Nat Cat losses in Canadian history. As you unpack the loss information, what is really interesting is that no single catastrophic event, nor any particular region, was accounted for the majority of the losses. When we look at yearly losses, all the other years in the top 5 have a recognizable large event or events driving those losses. 2022 saw losses from nearly every part of the country. 2016, the year with the highest overall losses, saw the Fort McMurray wildfire account for about 75% of national insured losses. 2013 was marked by the Southern Alberta floods, as well as major flooding and a December ice storm in the Greater Toronto area. In 1998, a major ice storm hit Quebec and parts of Ontario. And rounding out the top 5 was 2021 with a hailstorm in Calgary and flooding in British Columbia. Over the past 15 years, insurance claims resulting from severe weather have more than quadrupled. The new normal for yearly insured catastrophic losses in Canada is $2 billion. Most of this is due to water-related damage. In comparison, in the 15 years between 1983 and 2008, Canadian insurers paid out an average of $422 million a year in losses relating to severe weather. Even with the loss values normalized, you can see how many of the largest loss events have happened in recent years. As we continue to see the increasing impacts of climate change, it's clear much more needs to be done to enhance our resilience to these risks and build a culture of preparedness. I've included the next few slides to give you a bit more of a regional breakdown of insured losses. You can see by the perils that are being tracked the role that climate plays. Sorry. A changing climate is bringing a changing risk landscape. Here we have Alberta. You can see the trend line with very low numbers until about 2009, when you see the losses creeping upwards and a massive impact for that 2016 fire. But even without that, yearly losses near to or in excess of $1 billion have been happening with increasing frequency. In Saskatchewan, you can see a similar trend line, with NatCat losses starting to become more noticeable as we move into the late 2000s. These amounts are lower, though, than in the previous slide. The scale on the Alberta slide was in billions, and the scale here and for the Manitoba slide are in millions. So please keep that in mind. Instead of a gradual growth in losses, Manitoba shows peaks and valleys. You might have been expecting to see a direct alignment with the large flooding events that were noted in an earlier slide. But remember, insurers did not begin to offer overland flood insurance coverage until 2016. That is why we need to look beyond insured losses to get a real picture of the impacts of NatCat events across Canada. Insured loss information tells only a part of the tale when it comes to damages done from a catastrophic event. Federal disaster aid spending is on the increase as well. This slide includes information from the 2016 report of the Parliamentary Budget Officer on DFAA costs. Updating the stats in that report, since the inception of the DFAA, the Government of Canada has paid in excess of $6 billion in post-disaster funding to provinces and territories, and over 62% of that has been paid out in the last 10 years. The recent atmospheric river in BC likely added around $5 billion to future payments, and costs are expected to continue to rise significantly in future years. As the funder of last resort, the federal government pays on average 82% of eligible disaster costs, but the program has a per capita trigger, and smaller events don't always qualify. The next few slides will provide a bit of a deeper dive into flooding. I wanted to start by using some local data to illustrate how real the flood risk is for many communities. That's Winnipeg in the middle there, for if you can't read it. This is a screen capture from a flood model that IBC commissioned in 2016 to help insurers and governments understand not just the physical flood hazard, but also our exposure and financial vulnerability. It's a little out of date, but it tells an interesting tale. Now, this is a hazard layer from the model, but as you'll likely notice, the effects of flood defenses were not considered here. Experience has shown that flood defenses will fail, and the hazard layer shows where the water would go if that happens. But the model is about more than just a hazard map. It meshed the hazard map with information about residential properties to determine the value of at risk. And by running many, many flood scenarios, it was able to provide us with information on the number of properties at risk, the financial exposure, and even the impact of flood defenses. At the time the model was developed, there were 170,000 residential properties in Winnipeg. 160,000 of them, that's 92%, were at risk of flooding. 130,000 were at risk of fluvial or river flooding only. 400 homes were at risk of pluvial flooding only, and 34,000 homes were at risk of both. The total exposure or insurable value associated with homes at risk in Winnipeg was $35 billion. The average cost of rebuilding a home then was $220,000. Total insured and uninsured residential losses due to flooding were estimated at $27 million a year. And flood-related losses for the typical home in a flood-prone area of Winnipeg were estimated at between $200 and $400 per year. This AAL, or average annual loss, measures the average expected costs of flooding and is a common way of reflecting the financial flood risk to properties. Ooh, that's small, sorry. As part of the work of the Task Force on Flood Insurance and Relocation, Public Safety Canada developed their own updated model that calculated the number of properties at risk across Canada and projected the annualized costs of flood. Overall, they found that the estimated average cost of residential flooding in Canada is $2.97 billion annually, with costs varying by province and territory. Quebec, Ontario, and British Columbia have the highest individual loss estimates, which is in part driven by their larger population count and a larger number of exposed properties. Alberta has 7.8% of properties falling into the top 10% of risk, while Saskatchewan has a slightly lower percentage at 7.2%. But when you look at the actual number of properties, Alberta has 145,000 properties in that high-risk category, while Saskatchewan has only 30,000. Manitoba has almost 15% of properties, or 68,000 properties at high risk. If you look at the highest risk grouping, the top 1% of risk, where average annual losses jump to over $4,000, Alberta has 11,000, Saskatchewan has 1,500, and Manitoba has 2,600. These highest risk properties are major drivers of loss. This is a really cool slide. All the numbers, before I go a little further, all the numbers we've been looking at up to this point have been about Canada's existing risk. To the extent that we continue to build in risky areas or add to the risk, these numbers and costs will be higher. Sorry about that. So I included this chart because it's a really striking visual showing that most of the costs are associated with those at the very highest risk on the right-hand side. You can see that as you get into the top 10% of risk, the costs associated with flooding start to increase. And when you move into the top percentage or so, those costs almost explode. With damage costs so closely associated with those at the most extreme risk, we can start to see why some Canadians have been having difficulty accessing affordable flood insurance. The federal government responded to the task force analysis by pledging to establish a national flood insurance program to help those at the highest risk of flooding. The budget also committed to the creation of an online flood portal and to modernize the DFAA and identify high flood risk areas. The new federal government funding will help ensure homeowners, regardless of their risk, will have access to affordable flood insurance. This is a major step forward and critical to protecting homeowners across the country, even those at high risk of flooding. Thanks.
Thank you, Chris. She's staying up there because she knows that we're going to have questions on this presentation. So
straightforward.
We do have time for a few questions. So just a reminder, you can ask questions in person. You can ask questions on the Mentimeter by going to mentimeter.com and entering the code 7667-2407. So You're getting some thank yous and a question here. The prairies are susceptible to drought, and I find it interesting that drought is never in this analysis. Is this going to change?
It's probably because this analysis is a very focused and limited analysis. We're looking at insured losses, and insured losses really from the property and casualty side of things in the private sector are residential and commercial losses. We haven't even looked a lot of time at some of the commercial aspects of it, but drought is a thing that is more of an agricultural risk, and it would probably fall under a crop insurance type of a regime. And so it's outside of the scope of what I was talking about here today, but it is a very real thing, and it is a very real driver of costs.
Thank you. And we're taking note of the things where ClimateWest might be able to help in the future on topics of interest,
Yeah.
and this might be one
And
of them.
I think that this is important because I talked about a couple of the elements driving economic losses, and insured is a piece of it. Disaster assistance is a piece of it. Clearly, there are other pieces of the puzzle if we're going to try to get a true picture of what those overall economic losses are.
Thank you. Okay, do we have any other questions? Yes, sir.
Thank you for that. I'm just curious if any of the losses can be the increase in losses over time, if you've controlled for uptake of insurance products. So if people are more worried, they get more insurance to cover their things. So that could also be a cost account for some of the increase in losses. I'm just curious if that's part of it.
Well, one of the things that I mentioned as we were going through is that insurers only started to offer overland flood insurance coverage in 2016. Prior to that, none of those insured loss stats would have really reflected that, except in circumstances where insurers might have done ex gratia payments or looked at something and said, yeah, we'll categorize this as something else for our loss effects. But most people who own homes have insurance. And I think that we've seen an increase in the overland flood insurance take up, obviously, as it's become more widespread. When it was first introduced, it was only in a couple of provinces. It took a few years to roll out. And risk awareness is a really big part of it. Partners for Action several years ago did a report where they looked at people who they knew were in flood risk areas. And they went out and asked them a whole series of questions. And one of the things that they found was that 6% of people who were in that sort of flood risk area knew that they had flood risk. And risk awareness is going to be a key part of driving people's willingness to prepare and willingness to prepare financially, physically for a coming climate. That's why the portal investment by the government is such a critical piece of the puzzle, because that information about risk needs to be communicated. Insurers and brokers and agents are doing that to their clients, but more needs to be done.
Thank you. Other questions?
So Chris, I don't want to put you on the spot, but there are other financial tools, I'm just thinking like catastrophic bonds. Are those things that your insurance area is looking at as other products to go out? Or is that a totally different aspect of dealing with the impacts of catastrophic events?
The insurers that we represent are both primary insurers and also companies that offer reinsurance. And the cat bonds are a type of reinsurance type of product. But in the primary sector, certainly when you look globally, you see that there's an increase in interest in alternative sorts of tools and types of coverage available. One of them that comes to mind is parametric coverage in areas where you don't have a lot of income and such. People can buy a parametric cover, and that basically means that if a trigger is hit, a certain number of inches of rainfall or something that can be measured, then checks are just sent out the door really quickly. It doesn't, if you have no damage to your house, you still get a check. If you have more damage to your house, you still get the same check. So it's not perfect. It's not insurance in the way that we've been thinking about it, where it's putting people back together totally. But it is an alternative, and it is an alternative that is being explored by companies here in Canada, in the US, and globally.
Thank you. Question from our online crowd. Why did Canada's portion of insured losses go down so much in the most recent decade? You had mentioned that there was a slight decrease in the insured losses. Is it due to flooding?
Trying to remember which slide this was.
It was near the beginning.
No, I have no control.
In general, they've been going up, the insured losses, but I think maybe there was a
Yeah,
blip.
there's always a little bit of variability. As you can see, it sort of goes up, you know. The 2016 was huge. But you do have occasional years where the losses will be lower, but the trend line is really clear. When I started at IBC about a decade ago, you know, losses were sort of in the 500, 600 range. And I remember the first year that the losses topped $1 billion. Everybody was just astonished that it could go so high. And now we're talking about an average yearly losses in the $2 billion range. And it's flabbergasting. It's a slide before that, I think. And so, yeah, there's dips and valleys. You know, thank goodness not every year is 2016, because that would be really difficult to deal with.
Okay, we've got lots of questions coming here. We'll do Karina and then we'll come over there.
But how have you incorporated increased costs?
We're just gonna get you a mic.
Thank you. Not to understate the problem, but how has increase in construction cost index been incorporated into the numbers you presented? Like in Winnipeg, since 2000, we've gone through almost a 30% increase in residential cost of construction. You know, that would, to some extent, be a mitigating factor in terms of the magnitude of the problem, not necessarily the impact to insurers, but the impact driven through climate.
Unpacking it a little bit, when you're talking about things like the increased cost of rebuilding, yeah, that's going to be something that would ultimately sort of flow through into rates. But the rates would also sort of flow back down if those costs decrease over time. And remember that it's important to normalize those costs as well, because it's relative to overall value. Like a home that costs, I mentioned that one of the homes when we were doing our model, $220,000 was the average cost of rebuilding. If the average cost of rebuilding goes up to $240,000, that's something that's going to be reflected in insurance premiums. But then again, everybody's wages theoretically go up. And so I said theoretically, I saw the little nod.
Hi, so my question might reveal ignorance around this, but one of the slides that you referred to was around the caveat of like indirect losses, and you had Lake St. Martin event at the bottom there. I'm wondering around loss of life tends to be smaller. I don't know as private insurers if that is accounted for within that, like 2 people in Lytton. You also gave another example where 2 people died. And so with Lake St. Martin, there was this $85.5 million lawsuit that the province had to settle. Are those kinds of losses and costs part of like the private group of insurers that you're referring to, or is that some other mechanism?
So the Insurance Bureau of Canada represents the property and casualty insurers, and that is basically the folks who do home, business, and auto insurance. For things like life and people dying, and we've seen that, and we've seen the impacts of heat, that's something that's probably going to impact the life and health side of the insurance family a little bit more. But make no mistake, heat is going to be a really big thing, and it's going to affect the length of lives, and it's going to affect life insurance and that whole industry. And that's why the CLHIA is coming to the table to be part of those conversations, to try to, you know, be part of the solutions as well.
Thank you. We're going to take 2 more questions from online. And I think I saw a question on the Mentimeter about health and life insurance. So maybe we could go to that one. Are there insurance costs included in these numbers and impacts for health and life insurance required for short and long-term health issues for firefighters, for example?
No. Again, looking at it through the lens of property and casualty only, these are additional costs. There's all sorts of costs that are not part of what I've talked about today. When a disaster or a natural catastrophe happens, there's mental health impacts. There's all sorts of things that are part of those overall economic costs that we need to start thinking about. Some of them are really hard to measure, but we need to at least acknowledge that they are there.
Thanks, Chris. I know that's one concept I've been trying to get my head around, is like the insured losses sound so big. And in addition to the insured losses, there's all the other costs out there for our health,
Right.
for example. Okay, I think we had one more question from our online group. Is there any evidence on the links between property loss and impacts on property taxes? So, for example, municipalities' main predictable, reliable funding source is taxes. So is that linked to the property loss?
No, but the desire for property taxes might be connected to where municipalities just decide where they want to build things. I don't know that there's been a study there, and please, you know, there's a lot of expertise in the room. Perhaps somebody else is aware of it.
Okay, Joanna.
So we didn't look at property taxes, but we did look at housing market values. So we did demonstrate looking at control and flooded communities. So there's about 8% drop in a flooded community in comparison to a similar community that's not being flooded. And that's conservative, because that is in the climate where people are not that aware of flood risk, and people don't have access to online maps. So I think, you know, Europe has said that they expect about 30% decrease in the flood value of housing that's in floodplains as people get more kind of discerning about where they buy their house.
Wow. Okay. Thanks for that answer, and great question. Yeah. So there is a study at the Intact Center that shows it's about 8% reduction in property tax.
But the property tax, maybe that's some research that is something that should be done.
Noted for future work. And ClimateWest had a webinar with the town of High River, and they talked about after the 2013 floods. The mayor joined us, and he was showing how they had originally planned for a subdivision in certain areas, and then after the flood, they just didn't build subdivisions in certain areas that they had originally planned. So I think we're going to let everyone have lunch.